Okay, so tell me about yourself. Who is the first? Who's... Okay, so Satish. Satish, tell me about yourself.
Hello, sir.
Yes, do you hear us? Tell me about your trading experience.
So, my name is Satish.
Okay,
So, actually, I was trading in the 10th standard, little bit only.
okay.
So, almost
How much time you have in the
uh,
trading? How much time? When you started the trading?
almost over 10 years.
Over
But
10 years. You are from in the trading
yeah,
from
sir.
the 2013, 14.
Uh, uh, Almost 2018, sir.
Okay,
Sorry,
what's
sorry,
your
sir. One
age?
second. My age is 25.
25?
25, 25.
25, then how much you have a too much experience? Okay, so
Uh,
another
yes,
man.
sir.
Okay, I got it. Dipali, do you hear us?
Yes, sir, I can hear you.
Okay, Dipali, tell me about yourself, about trading experience.
I started doing it last year only, and I started doing myself only on my concept. And I
Okay.
don't like doing trading through any indicators, which I don't like. And I started following your videos,
Okay.
and I really liked it. But I didn't start it because I am working on the concept you have explained
Mhm.
over the on YouTube,
Okay,
and
okay,
yeah.
okay, okay.
So
So,
basically, I started with Elliott Wave also.
okay, Elliott wave. Okay. On the phone, you
Uh,
already told me about the Elliott wave. So, how you are
yeah.
trading binary option in the Elliott wave? Because the Elliott wave is a strategy of forex market.
Yeah, but because I didn't know anything. I didn't know
Oh, okay,
whom to approach or whom to know. But
okay,
so
okay.
I was going through YouTube videos and I have seen that I was just going through the pattern and following that, and I was getting the result also. But
Oh,
when the trend changes, I was not able to understand. Means
okay,
like that time, but I stopped doing the trading and then I started learning it. Now I
okay.
want to learn it properly.
Okay, Sabat, tell me about your trading experience.
So I started in August 23.
Okay,
First 2 months, I took training somewhere where they were teaching indicators.
okay.
And I had huge losses. I realized that's not the way to go. And I started with price action, just started learning price action on YouTube. So one of my friends referred to you. So when I saw the syllabus, it was very impressive. I just have a very mild idea on this demand
Mhm.
supply market structure. I
Okay,
look forward to learn in depth. So
okay. So now
it's
in the
not binary
trading,
for me, sir.
okay.
Yes,
So in the trading, you started in a live trading, real trading.
I started. Yes, I started.
So
I
are you in a
started
profit
within
or
1 week.
loss? Are you in a
Uh,
stop?
first, first
Mhm.
2 months with indicators, I
Mm.
lost big. I mean, 4 5 lakhs almost.
Oh my
When I
God.
started price
Okay.
action, it is like
Mm.
much better than earlier.
Okay.
Slightly recovered my earlier losses, but long way to go, sir.
Oh, yes. Okay. So Jabril, yes, tell me about yourself. Do you hear us? Jabril, Jibril. What your name? Okay, who is in the name of iPhone?
It's Adira.
Okay. Okay, yes. Tell me about your trading experience.
Yes. Brother, I started this trading experience from the COVID time. It's 2019,
Okay, so
and
three to
at the
four
time it was
years.
boom.
Hmm.
Yeah. At the time it was so boom. This kind of a trading one. Okay, I started learning, and I'm your YouTube follower as well. And I'm not saying I'm a loser now. I'm
Mhm.
earning money from your videos. As I
Okay.
mentioned in your chat, my
Okay.
favorite strategy of your video is like momentum stop areas. So I started earning only with that strategy. So
Which is strategy?
it's
Repeat again.
momentum stop.
Okay, momentum stop. Right.
Yeah, that is the only strategy I'm using up.
Mm-hmm.
But I'm master in that. I'm earning good in that. But even then, I
Very
just wanted
nice.
to enhance myself. So
Oh,
that's why I
yes.
have joined this class. Yeah.
Okay, that's fine. Okay, that's great. Let's introduce the course content first of all, then we will start the lesson. So this course based on few main topics like a basic price action. I know all of you know about the basic things, but uh, review the basic things and maybe some points are still remaining in your experience. So I want to clear all the points which are related to the basic education. So in the basic education, most we will concentrate on the weak rejections of the candlestick because mostly the operation inside the candles give us a hint of next prediction. So mostly the traders which they are starting the trading, they are thinking that we can go the reversal trading, but very few traders continue the uh, uh, trade with the continuations. You know that the continuation is most profitable strategies. Like after green candle, you can expect another green candle. After red candle, you can expect another red candle. These type of strategies will give you more profitable trades as compared to the reversal trading. Because reversal trading mostly counted in the counter trading, okay, anti-direction. Okay, so in the basic price action, also we will learn about the chart making. Chart making, what we will learn in the chart making, the algorithm of the chart, that which type of sequences uses in making the chart. The sequences will be made from the candlestick, and those sequences create a chart. And these sequences will give you a lot of opportunities to trade. Means each and every sequence will give you one strategy to identify where the market is going and how you can take a decision as per these sequences. And mostly the market works on the similarities. Similarity is also one type of sequence. Candlestick cycle, market cycle, it is also one type of sequence in the chart. So these sequence we will learn and we will uh, identify the opportunities. And after these sequences, we will focus on the trading patterns. These will be more than 30 to 40 signals of the trading patterns. When this basic will be clear, we will move to the support and resistance. Because support and resistance based on the supply and demand. If our opportunity is not working sometimes, the reason can be the support and resistance. Because of the support and resistance, sometimes our patterns fails, our sequences fails. Then it's very important to know about the formation of SNR, drawing of basic SNR, which is visual and hidden. Everyone knows about the visual SNR. When they are drawing on the red and green means a reversal candlestick pattern. But there are some hidden SNR which are very important in trading. So a lot of types of SNR is there. Some of them, like a momentum stop SNR and strong versus weak SNR, SPR and RBS. This is very important SNR. It's also called the flip concept. Trend lines and channels means it will take also 2 days or 3 days to complete these all type of SNR and how we can use in a trading. When these two topics will be complete, we will move to the advanced price action, in which we will learn about the candlestick behavior, like a candlestick psychology. So these behaviors will give us a more prediction or more edge on the prediction, like on the patterns or other things. The trend trading, continuation trading, or reversal trading in a direction. There are two types of reversal trading. One is a counter reversal trading, and another is a directional reversal trading. The directional reversal trading means if you are in a downtrend and then you are finding the reversal trades in the direction of the trend, means you are selling, but you are choosing the reversal trades. These directional reversal trading is more easy as compared to the counter reversal trading, means in a downtrend you are finding the opportunities of the buy. And these type of opportunities, if you will find, then mostly you will be near to the range in the trading. Because in downtrend, and if we think we need to buy, and if we fail again, we will buy to recover. Again, we will buy to recover. that will be count in a revenge trading. Okay. So the candlestick psychology also give us too many opportunities for trading. Chart patterns overall give the overview of the market that where in it will go in the long term. Like these sequences or candlestick patterns will give us uh, information for the short term, but the chart patterns will give us a idea about the long term, that what will be the major trend in the market. And then when the price breaks the resistance or support, the breakouts happens in the market. Sometimes these breakouts are the fake and sometimes are the true breakout. How to identify and how to use in the trading these breakouts. So I will clear with the strategies. And after that, there are some fundamental uh, news reading tips which I will give you about the trading, that what we can do during the news we can trade or avoid, or which news we can use for the trading. Like, and also trading time. 24 hours we can trade in the morning or in the afternoon or in the night, which time is better for our country. Okay, so after completion of this part, these three parts, we will move to this part. Like these three topics are compulsory. This one, uh, except the volume spread analysis, all other topics are compulsory in the trading. Volume is optional. If you want to learn, it's up to you. If you want to use in your trading, it will give you the more filters in your trading. Or it can increase your winning ratio, decrease your opportunities. Because more things when we will filter in any strategy, that the opportunities will decrease, but the winning ratio will be increased, performance will be increased. So there are a lot of strategies, 1, 2, 3, 1, 2, 3, 4 strategies, anomaly validation strategies, and the law of the volumes we will learn here, and the candlestick wick reading with the volume, what the impact volume is in giving us in a trading. Okay, so these are the points we will learn here. After this is very important point, our behavior in a trading. Sometimes we are good educated in our trading, but we are not good in a thinking. So we need to understand that we are in a negative mindset or we are in a positive mindset currently. If we are negative, how we can turn into the positive mindset? And then when we will become a positive mindset in trading, then we need to control our emotions. There are three emotions which can give us a bad results. Are our performance affected from these type of three emotions: fear of loss, overcome, and greed, and revenge in trading. So is there any person who is affected from these type of emotions from you? Any member
Ye-
who is
Yes,
affected
sir.
from these? Yes.
Yes, sir.
Okay. Which fear of loss or greed or revenge?
Not yeah, you can say loss, or maybe unexpectedly I can earn this much or that much. This is like
Okay.
by doing trading, I would be able to earn.
Okay. So
I don't
how?
have confidence.
Okay. So you don't have confidence because to take the decision on the trading, right?
Yeah, yeah.
Sometimes. Okay. So greed is two type of greed. One is a negative greed and one is a positive greed. If you don't have a greed, then what you will do in this business? Definitely you have a greed to earn the money, right? To fulfill your dreams. So that's why we came here. Negative greed is very dangerous for our trading. Negative greed means that when we are losing money and immediately we want to recover those losses. That time negative greed generates and then it can below our account. That time when the fear of loss is also there and then negative greed is there, that time we will start the revenging from the market because our performance is currently bad, but we want immediate recover. That time we will use huge money from our account and then revenge from the market, and then we will lose everything. So this is very bad here. Okay. And then if we control these all points, still there is a something to understand. This is traps of market. Like when we are preparing for any strategy ourselves to apply any strategy in the market, sometimes some points we are leaving. We are ignoring some points. We need to understand that which points are important for any strategy to become a master. The anchoring process, a perfect anchoring process of any strategy we will learn. And then also there is a trap of sunk cost. So mostly what we are doing, we are always saving the screenshot of our profitable trade. When we have some losses, we are ignoring them. We don't want to see our losses. But if you see your losses, if you collect 100 your losses, if you will check 50 losses will be based on the one mistake. And rest 25 losses will be on the second mistake. Means that two mistakes you are having 75 losses. You can increase 75% performance just studying the two losses. Just check, understand two losses. If you will remove from your trading, your performance can be best. So it's very important that we learn from our losses. And confirmation, confirmation is what? Right strategy in right time with right market. Means all the strategies, if you will learn, these strategies will not work 24 hours in the market. Because market have a different trends like a uptrend, major uptrend, minor uptrend, strong uptrend, healthy uptrend, and then like downtrend again, ranging market, consolidation market. These are the phases of the market. So if a strategy belongs to the strong uptrend, and if we are trading that strategy in a downtrend or in a ranging market or in a consolidation market, that strategy will not work. It gave us a losses. It means that when we are using any strategy, we need to confirm that which market is there. We need to wait for the right market for right strategy. And time must be right in our country when we are trading. So that confirmation is very important in our trading. And blindness. Sometimes we are following so many concepts without any confirmation, without any research. Just we are believing on any person that he told or she told us that this is a good strategy you can use without any research we are trading. We are taking some signals from any group. That is also wrong, where we will lose the money. Relativity, and sometimes in the group or in the academy group, some traders, they are doing trading and they are showing the results, and we just uh, uh, saw those results and immediately asking from those traders that which is that strategy, and I want to start trading on that strategy. Don't do like that. Or if someone who is using the high amount in trading, and if you are thinking if he is using why I cannot use, and you are just following the other people's without any confirmation, so this trap is also giving us a losses, and sometimes irrational losses like our uh, our family issues, our mm, friends are outside on the job, our colleagues, we have a problem with that area. So if our mind is upset and if we are trading, that we will lose. These all traps are very important. When we will start this lesson, I will give every examples how we can overcome all. Okay. After that, we need complete risk and reward planning, trading plan, profit targets, losses, and which money management is better. There are a lot of money management. Martingale is also money management, but not at this stage. When you will be a pro, then you can use the martingales. Otherwise, we need to use the simple compounding strategies. Not compounding means we are investing all the amount, but there's a partially compound money management we will use. And how all the strategies when we are using, how we can put into the money management, all these things we will learn inshallah. Okay, So is there any suggestion on this content that I can increase more or add any topic, something? Is there any suggestion?
Brother, is there any SMC concept involved, or how it is, how this works?
Again, repeat again, brother.
SMC concepts. In your YouTube channel, there is one separate playlist called SMC, Smart Money Concept,
Yes, yes,
which is
yes.
also involved in this, or it is a
It's
different
not,
one?
it's not involved, but the market structure of the SMC, it is in this course. Okay, when we will learn the
Got it.
supply and demand, that time we will learn the market structure, because SMC is overall the market structure, where we are learning the change of character and liquidity hunt, inducement, and types of liquidity, order blocks. These all are included when we will learn the supply and demand. These topics are looks like a simple topics, but there are a lot of topics inside. Subtopics you
Got
will
it.
find
Okay.
in the topic, main topic, right?
Okay. Okay.
Okay. One by one, all the
Sir,
topics
it's
we will
mentioned,
learn. Yes.
sorry, it's mentioned binary options के लिए, sir, but is it only for binary or for forex and Indian market? We have
Yes.
enough content here to cover.
When I will cover the course at the time, if any point is important for the forex or this point is important, mostly you focus on the binary option. But if some points are too much important for the forex market or Indian stock market, I will explain that you can use same concept in other markets as well, as because the way of buying and selling is little different, but the analysis is only same. There is no difference, right?
Okay, sir, thank you.
Okay. So that was the introduction of the course. Now let's start the lesson. So we will start from the basic, right? Because some members also, they demanded to start from the basic, okay? Here we have a reading of candlestick. Every trader know about the candles, that each and every candle have an open, close, low, high, and its body color. What is my important information here? In these two buyers and sellers candle, what's the difference? First difference is that open and close, right? This is the difference here. This difference shows that the buyers always try to move in up direction and sellers always try to move in down direction. After that, this is a lower wick, this is the upper wick. This will be same upper and lower wick, but what is the operation here? When the candlestick opens, the sellers try to move down. Okay, here the sellers came down. At this point, who tried to control the sellers? Buyers tried, right? So buyers when tried and control this area, that in this wick, who control the market? Buyers or sellers? Yes. Okay, participate with me, Ka, and communicate with me. In this area, who controlled?
Sellers?
Sellers.
No,
Sellers.
sellers entered, buyers controlled them,
No,
right?
yeah.
Buyers
Okay.
control,
Yes,
sir.
sir.
Buyers
Yes.
control.
Now
Active
the
seller.
lower wick in the green candle always shows that the sellers are failed, right? Means in the whole candle, that is a place where it's very clear that this is the strongest point in this candle. Even there is a body, right? But the lower wick in the green candle is the strongest part of the candle. And same here, if you can see, buyers entered in the market at this area, who controlled? Sellers. So this is the strongest part in the sellers candle. Mostly what the traders are using, they are using that if there is a green candle and which have a huge rejection from the topward or upward size, and they're expecting the next candlestick will go down. Or if there is a red candle which have a lower rejection and they're expecting that the next candlestick will be green. Mostly they are here selling And here they are buying, but they are failing. So in this candle, in this wick, like this is the upper wick in the green candle, this is also upper wick. So if we just to check that this was a green candle, yeah, there's a green candle, and then sellers tried. So how much percentage they controlled? Sellers 80% or 75% they controlled. They weaken the buyer, but still not controlled overall the candle. It means still who is in a power? The buyers are in a
The
power.
buyer.
So once the sellers fail to control the buyer, again the sellers will start from where? At the open price. At the open price. It means that again buyers will come and they must go and reach at this point. Maybe they rejected back and now the sellers make an start. So mostly after the inverted hammer type of candle, of this type of candle, the upper wick is a sign of continuation the next candle. Even there is a lower wick. What is this sign? That it is not a reversal sign that the next candlestick you can predict as a green candle. No, here you need to predict what will be the next candle. The red candle must go down, or sometimes the red candle is a very small candle, still not reached to this point where the buyers tried. But on the next candle, first the price will come down and then it will be rejected back and it can move in the up direction. Where we will select the entry, where the point in this candle they rejected the price. But in other case, in case if you find that this candle closed directly under the resistance, now there is no choice to move in up this area because that was a supply and currently now this is a supply area. So in this case, if there is a resistance level, directly you can select the price will move down. But if no resistance or it is away, then you can expect a green candle. So the upper wick in the green candle mostly in the favor of the buyer, not in the favor of the seller. And this is also this is most favorable wick for the buyer candle. And how we can use the lower wick and this upper wick in the market? See here, if for example, if you find there is a red candle and the buyers entered because of any support or any breakout, market moves up and this green candle have a lower wick. Now, mostly the traders what expecting? That is a support. And if in case if this second green candle closes under the resistance level and there is a support. So mostly traders are thinking that the price will go down till this support. Again, if the buyers want to enter, then it is possible. So sellers enter in the market because of this resistance and closed in this area. Closed in this area. Now, still the traders are thinking that the next candlestick will go down and close here. And they are selling. But what will happen? You will find that this wick, which is where the sellers failed and buyers control the market and the red candle closes inside in this area. So you will expect green candle as some traders are expecting the red candle. Here there will be the green candle because of this control wick. Same when you will find the green candle closes inside this wick, the next candlestick also will reverse back. Now, sometimes if it will not work, means there will be the interaction of gap up and gap down. We will also learn that is in our course, the gap up and gap down concept. So overall, what we have learned in this wicks, that which wick is important more in the green candle? The lower wick. And
Lower wick.
in the red candle, which wick is more important?
Upper
Upper
wick.
Upper
wick.
wick. upper wick. So this is now hidden because the common support and resistance, everybody knows that where is when a red and green candle forms. When a green and red forms, it is a resistance. Mostly traders know about this support and resistance. But between the two green candles, within the lower wick, they don't know that there is also a hidden support because there was oppression. Okay, so this point is very important. This you can use as a strategy, and also you can use as a filter in all the strategies. This point, don't forget. It's very important point. Always in every lesson, maybe we will discuss about this point, and I will give a lot of examples of this one, right? So this is very important point. Note down. After that, this is wick, but we need to more interpret this wick. What is the internal operation? So in this chart, in this slide, what I have done that a red candle enters in the market and green candle controls the market. So now we need to do a candlestick math. If there are two different color, we will subtract. If there are two same color, we will add. Even there are red candles, two, we will add them. Or if they're green candles, we will add them. But if it's different, then we will subtract. How? The bodies we can subtract. The wicks cannot be subtract. Like there is a body and this is, it's matching. So when we will decide what will be the wick, which color will be the wick, we will check which body is greater. If the green is greater, the wick will be green. So the remaining body we will put on the wick. So a shape is formed. This shape is showing that the bias are stronger. The hammer is sign of strength. But what is the operation inside this wick? You understood right now. The sellers was entered and who controlled? Bias controlled. Means sellers failed. That's why this hammer is very strong. Now hammer can be formed from 2 candle, from 3 candle, from 4 candle, from 5 candle, from 6 candle, from 12 candles, whatever. So when we will subtract or we will add, we will get a single candle, whatever the candles, like how the time frame generates. Look, the 5-second 12 candles generated 1 minute. Or 3 5-second candle generate a 15-second candle. Or 4 15-second candle generates a 1 minute. Like 5 1-minute candles generate a 1-minute candle. So this, like this, the time frame generates. So, and each and every candle giving us information basis on the internal operations when we are subtracting the candles. And now, if you find this operation, then you will understand the value of inverted hammer shape. Secondly, means in the end, sellers attacked on the buyer, but that attack was not complete. That was a partial attack. They tried only just 80% they control. That's the reason that upper wick is showing the weakness of the buyer, but still the 20% buyers are available in the market. So if the sellers fail to control this bias candle, again sellers need to start from the upper wick. And this is a strong candle, this is a weak candle. Again, the sellers entry and then buyers enter the market. Again, sellers enter the market. If we just take a 12 candles of 15 second, also this type of shape can be generated. Or 4 candles of the 15 second, also this shape can be generated. Well, this is just for the understanding that if you find an entry from, collective entry from the bottom side, again buyers enter, then after the sellers enter. And if we subtract them, it gives us a shape of a neutral candle. And sometimes a minor entry from the seller side and the minor entry from the upper side of us from the green candle seller side. So it gives us a normal shape of the candle. So overall, the 4 categories in the candlestick with a body we found, and 1 category means there will be no body, only just rejection from upper and lower side, or only just from the upper side or just from the lower side, like a doji candles we will find. So there are 5 categories, but mostly 4 categories we are using in our trading in all strategies. These shapes giving us a sense that what is the condition of the market. Currently the market is strong or it's weak. So we can use these as a single candlestick pattern. We can use as a shape as per the information. The name doesn't mean we need to remember what's the name of the candle. Just we need to understand the operation of the candle. So if these 4 candles give us a sense strong, weak, neutral, and normal. Same you will find from the seller side. Means what the information we learned from for the buyer, same information in the opposite you will find from the seller. The meaning will be same. Okay, so these 4 categories means the candlestick ranges of these categories. These are the strong candles. These are the normal candles, weak candles, neutral candle. These all candles you must recognize in the chart, because all strategies are based on these candles. And these candles not just recognize it's a weak or it's a normal, you must understand operation inside that. Because of that operation, what are you thinking, what can be the next candle? When all other information we will add, we will be able to know or decide that what will be the next candle. So open the chart and then check all the candles and match with this candlestick ranges. If everything is clear, means this lesson is clear. Now we understood the 2 topics. One topic to understand the candlestick upper and lower wick in the candle, green or seller candle, and then these ranges of the candlestick. These 2 topics you need to clear first, right? After that, we have a single candlestick pattern, because when we subtract, we got the shapes of the candle. These shapes of the candle give us a reversal or continuation patterns. These reversal continuation patterns we will get for the bullish and also bearish. These 3 patterns, the bullish hammer, bullish inverted hammer, are spinning candle. And same from the bearish side, these are called the primary patterns. Mostly when we are subtracting what amount of the candles, at the end we will get these 3 candles. That's why we are calling it the primary pattern. This is a Marubozu where there is no wick upper side and lower side. It shows that there is no counter effect. And this is a strong candle. And sometimes we will find the half Marubozu. Half Marubozu, mostly a small wick at the bottom side, no wick at the top side. Small wick at the top side, not more than 5% of the candle. And there is no wick here. Half Marubozu, or we can say there is no wick on the close, it's a closed Marubozu, no wick on the open, it's an open Marubozu. So these all we can use in a trading as a signal. And the bearish candles also you will find there. Now when we will move, there are 2 more candles which are also related to this one and this one. These are called the pin bars. It looks like a hammer, inverted hammer, but the entry point will be different in a trading, but the meaning mostly is the same. These are a little bit weak as compared to those candles, but we cannot say it's the same like a hammer or inverted hammer. Little bit different, okay? And mostly you will find these candles, hammer and inverted hammer, very few candles you will find. And after that, these single candlestick patterns are the reversal or continuation. Anyone can tell me what's the reversal pattern and continuation pattern? What do you know about the reversal and continuation patterns? Yes. Is there anyone who can?
The hammer, inverted hammer, everything is in hammer, inverted hammer, spinning top is a continuation. If
Okay.
it is forms under resistance or support, then it is a reversal pattern.
Okay. Any other member Who tell me about that?
Yeah, hammer and inverted hammer, which follows the previous color, then it will continue.
Very
Otherwise,
nice.
it will reversal sign.
Perfect. That is good. Look at, if you find a hammer and look at the previous candle, is it different than the hammer? Yes, it's a reversal pattern. Why reversal? When the direction going down, immediately or suddenly we found a hammer pattern. The direction is moving up. What's suggesting that pattern? That who will continue now? The bias will change the direction. Before the direction was down. Now the direction will move up. So this, after the red candle if appear, it is called the reversal pattern. Any pattern which can change the direction, that is called the reversal pattern. Even it's a double candlestick or triple candlestick pattern. Like this one is also, these are also reversal patterns because the first candle is different than the pattern candle. But the difference, if you will see on the continuation, see, same candle then hammer, same candle then inverted hammer, same candle then spinning candle, same candle here. In the addition, this name is changed right now. This is bearish hammer, this is inverted hammer, but here the name is changed. This is called shooting star. This is called hanging man. But the work is same. It's a reversal pattern. It will try to continue the candles in a downward. But which concept will decrease the performance of these all pattern? Anyone knows? Which concept? Which will decrease? These continuation sign mostly have a 80% winning ratio. And these reversal pattern have a 55% winning ratio. Which concept decreases the winning ratio of these all patterns? Do you know? Anyone know? This one concept.
Gap up.
No. SPR and RBS. Support become resistance and resistance become support.
Support.
Mostly you will find what the sellers are moving down. Sellers are moving, for example, sellers are moving down and then down. They are moving down like that, right? What happened? The last red candle broke the support, previous support. Because of breakout, the sellers pushed the market down, but the process of retesting, it is necessary or compulsory in the after the breakout. So buyers try to enter in the market and comes and close under the again the resistance. So before that was a support. Before that was a support. And when it's broke, now it becomes a resistance. So when this hammer closes under the resistance, that time it will not work. That time it will not work. Means the next candlestick mostly will be the red here. But for example, like if I just take an example on this candle, if the red candle directly closes on the support, and now this pattern is formed, what do you think? What will be the next candle? Mostly the next candlestick will be the green from here. Why? It closes on the support and the pattern is created on the support. That's the reason the next candle continue. Here, this hammer not works. Even it looks very strong. The candle size, the lower wick is also telling us that the next candlestick will be green. But because of the SNR, it will not work. Now, again, we will review the concept. Which will concept? If just you remind that the hammer, the lower wick, who is controller in this market? The buyers are controller in the market. And this wick, mostly what you will find that the buyers will enter again.
Enter.
It's possible they will enter again, right? Like that. Because this is the candle. Now, but in sometimes you will find like that this candle is very big. This candle is very big. Now, the support that was before there was a demand, for example, that was a support. Now, the sellers controlled it. Now, what it becomes? This support becomes now
Resistance.
resistance, means demand becomes now supply.
Supply.
So these concept will change time to time on the different operations of the price. And later on we will learn on this. Okay, so the reversal pattern is little bit risky to trade because we are just leaving the running trend and we are focusing on the very new trend. There was no confirmation, only just the pattern is just information. But there is no more confirmation that really the bias wants to continue the trend. Only just on a single candlestick. Before there were a 4 to 5, 6 candle, that is a confirmed downtrend. Only just on the single candle, if we will believe and trust and then we will go with the buy, it's very risky. Means this is called mostly the counter trading because the trend is down and we are going for the buy. That's the reason mostly the reversal patterns winning ratio is 55%. The same hammer, when we are trading in an uptrend, it's giving us 80%. So here we learned the position of the price always matters. So hammer in the bullish hammer in the downtrend giving us a very not a too much big winning ratio, just a small winning ratio. This is not good in a trading in a downtrend. Yes, it is very good when we are in a uptrend or in the running uptrend. Okay. And sometimes these continuation signs, before you will find any double candlestick or triple candlestick pattern. Now this hammer is a continuation sign of this engulfing pattern. Later on we will learn the double candlestick pattern. And sometimes the information we will get that this is a continuation sign of the trend. If there is a red candle, then the continuation sign of the engulfing pattern. So also this hammer positions will be changed time to time. All the time it will be not same. Okay, after that we have a double candlestick pattern. The double candlestick pattern, bullish patterns, if we will find a red candle and then the green candle controls. So now if it controls, if we will subtract, what will be the next answer? When we will subtract a red candle from the green candle, because bigger candle is a green. So what will be the answer here?
Pin bar.
Pin bar in
Hammer.
case if there is a wick. Now upper there is no wick means that is a hammer, it's not a pin bar, right?
Sorry.
Yes. So engulfing meaning, for example, I don't know the meaning of the engulfing. What is the engulfing meaning? But when I subtract these two candles, I got this information. Now I know that is hammer. Hammer means who failed? Sellers failed. Who controlled?
failed.
Buyers control the market. It means that buyers are the controller currently in the market. So engulfing means who is controller? Buyers are controller.
Buyers.
Okay. So after subtraction, all the double candlestick patterns, when we will subtract, we will get a single candlestick pattern. Easily you can understand the meaning. If you are unable to understand the 2 or 3 candles, then subtract it. Immediately you will get the meaning. So here is showing the hammer, means it's a strong pattern. Okay, if it is a strong pattern, then okay, first of all, some information I need to give you about the engulfing. Okay, see, this is a line. Why I put this line here? The bigger candle is a green. And the candle if I just to measure this candle, I can measure in a two-way. The range of the candle, range, and I can measure as per the spread of the candle. So what is the range and what is the spread in this candle? For example, if there is a candle, and if you are taking the measurement from low to, from this point to this point, it is called the range of the candle. Okay. And for example, if you want to measure the spread of the candle, then ignore the low and high point, the open point and close point. That is the spread of the candle, right? So it will be required when we will trade the Forex market, that where is the range of the market, range of the candle, range of the market, range of the trend. It also required in a trading. So spread and range, this is difference. So now when the bullish engulfing formed, we will check the open and close, and we put a 50% level. The 50% level, it will be considered as a support, and also it will be considered that the red candle is greater than the 50% level. That's the reason now it is confirmed it is an engulfing pattern. If this red candle less than 50%, then it will be not considered as engulfing, then it will be considered as what? Outside bar.
Outside bar.
So the winning ratio of engulfing and outside bar is different. When I will subtract this outside bar, this is not a hammer. This is not a hammer. Look at hammer means the body must be one time and the wick must be two time. So this is not looks like a hammer. The hammer looks like that one. As much as bigger wick, it will give us a more strength. This is different than this one. Smaller the body, bigger the wick. Here, the wick and body mostly is equal. That's the reason. Second time, first bullish engulfing is strong. Second, outside bar is a strong pattern. After that, if you find a red candle, and now the green candle we found is smaller than the red candle. So again, range of the candle or spread of the candle. We will take a spread of the candle, right? So spread of the candle, and we will draw the 50% line here and saw that the green candle is greater than the 50%. That's the reason it's a piercing line. And this line is also work as a support. It's also hidden support level, right? And this is, if less than 50%, it's called inside bar. And the concept of the jump up and jump down, it proves from the pattern bullish harami. It proves that if a candle closes here and the next candle opens with a gap, this gap is up, the gap up, and it must not greater than the open price. Wick can cross, not problem, but the candle must be in the mid of the red candle. So that's called the bullish harami. This is also pattern. It is also equal to the piercing line. The strength of the bullish harami and the strength of the piercing line is equal. Okay, so same patterns you will find from the bearish side. Now these patterns, if you will trade directly, you will get the 55% winning ratio. We need filters. What can be the filters we can use in a trading? Later on I will tell, but now just I'm telling about the filter, but not explaining. The trend filter and support and resistance filter and continuation sign filter. These three filters are very common for these patterns. But this overall winning ratio, without any filter, it will give 55%. Now, this is confirmed that each and every pattern gave us a 55% winning ratio. Means we need to recognize each and every pattern, because our motive is to understand and identify the opportunity which have a more than 80%. And if we are thinking 55 winning percent into the 80%, means we are wrong here. Our performance will be decreased. So that's very important to recognize all the patterns. Now, if I add one green candle or one red candle in all these double candlestick patterns, it will form a triple candlestick pattern. And these triple candlestick pattern also give us a 55% winning ratio. It means that we must recognize. So one strong candle. Strong is also a hammer, but we will not add the hammer. We will not add the spinning candle, or we will not add these three candles we cannot add. Other rest, all the candles we can add to create a triple candlestick pattern. Let's see here. 3 outside up bullish pattern like this. In the engulfing, we added one candlestick pattern. This can be the normal candle also, but it's a Marubozu candle, closed Marubozu. It can be the open Marubozu. It can be the full Marubozu, or it can be the normal candle. So it creates a bullish engulfing. Now, bullish engulfing plus one strong candle, it creates a 3 outside up. Outside, why? Because second candle closes outside the first candle. This is also 3 outside up. Mostly the traders are thinking the buyers are strong now, the market trying to continue. They are buying from here, but you will find the red candle 45% chances. This is not 80% chances the next candle will be green. Here, there are only just a 45% chances to come the red candle. Appear the red candle. Means after this pattern, if we are thinking more opportunity for the buy, means more risk is there. Okay. So 3 inside up also is the pattern, this one. And so it will give us a 55% winning ratio. And then 3 outside down and 3 inside down. These are the patterns. And also the morning star, evening star, 3 white soldier, 3 black crows also we will learn on the next class. And also how to trade all these patterns, which techniques we will use. There are 3 techniques to trade the patterns. One is the basic technique, trade with the continuation sign. Another is the technique, trade with the market sequence. The third is the technique, trade with the market cycle. All this, and fourth also the trade with the volume analysis. So all these techniques we will learn slowly we will go. This is enough for today. So what's the assignment? Just recognize these all the work on the chart. If you are unable to identify anything or unable to understand anything, then note down the query. Tomorrow before we start the class or end of the class, I will give the answer. If currently now, if there is any query, you can ask here.
Sir, any time frame specific, sir? These candles work like in lower time frames, they may not. In higher time frames, they will.
Look,
Something like that, or
that if it is depend upon which market we are trading, right? So if we are trading the binary option, we can trade in a 1 minute candle, we can trade in a 2 minute candle, and last we can trade in a 5 minute candle in a binary option. But if you want to trade in a forex market, we must start from the 15 minute. Must start from the 15 minute.
minutes.
And in a
The probability is better, is it? In 15 plus.
in a
Probability is
forex
more
market,
of
in a
success.
forex market,
Yeah.
because forex market will give us a profit in the shape of pips, right? So a 1 minute
Okay.
or 5 minute candles cannot generate the more pips. The 15-minute candles will generate the more pips, right? So the information will be concise. In a 1 minute,
Nifty, Bank Nifty also, sir?
yeah,
15
in the
plus?
bank nifty not, because in the bank nifty, the value of the point is too much as compared to the forex.
Yes.
Where 5 minute we can use,
Okay, sir.
where we can use the 5 minute. But in the bank nifty, there is a logic to understand the gaps, the opening and closing gaps of the day, and opening and closing gap within the common candles, means in the running candles. If the gaps strategy or gap understanding is not there, then the profit from that market is very difficult. Okay.
Yes, sir. Will
So
that be
chart
covered, sir?
making,
Gaps
yes,
also later, right?
yes,
Okay,
yes,
sir.
yes.
Thank
I
you, sir.
when I will give the second lesson or third lesson. In the second or third lesson, you will understand how to read all other type of charts, means rather than the forex. Okay.
Okay, sir. Yeah. Thank you so much, sir.
Any
It was
other
a great
member?
session.
I think because it's a starting, there's no query. Maybe on the second day, third day, the queries will be started. But you review this lesson, and if there will be any query tomorrow, inshallah, we will clear. Okay, this is for today. Tomorrow,
The number of classes will be 12.
yes, it's depend upon that. If we can complete the course in a 12 classes, if it takes a 13 or 14, not a problem. But
Approximately 13 or 14 or maybe 12.
yes, yes. But
Three weeks.
as I know that I have experience, it's a 48 course, that 12 classes are enough for this course, right?
Okay, sir.
Okay. Thank you so much.
Sir, volume
Yes.
one, you said that volume one, I think you should include in the words.
Volume 1.
Anomaly,
Yes, yes,
validation.
yes, yes. It's included because I already gave the introduction on the volume.
Yeah, yeah.
Yes, there will be 2 days on the volume. We will learn the 2 days.
Okay,
We will
sir.
learn the volume, trader
Okay, thank
psychology,
you.
everything. Inshallah. Thank you.
Thank you
Allah
so much,
Hafiz.
sir.
Thank you.
Thank you, sir. Allah Hafiz.
Thank you.